Hi everyone, thank you for joining me today for part 2 of our taxpayer education series. My name is Zahra and I'm the staff attorney working at the Low Income Taxpayer Clinic with the Erie County Bar Association Volunteer Lawyers Project. Today's program is going to be focused on marriage and taxes. On our agenda today, the first portion of our presentation is going to be focused on important considerations for newly married individuals. I just want to provide a quick disclaimer that a lot of the information that we're going to cover in this portion of our presentation applies not just to newly married individuals, but really anybody who's had a significant life change. This information will be applicable. The second portion of our presentation is going to focus on innocent spouse claims versus injured spouse claims, and really what each type of relief entails and when it would be appropriate to use each type of relief. So some things to keep in mind. The first is that the US tax system is a pay-as-you-go system. So what that means is that you're expected to pay a portion of your tax liability throughout the tax year as you earn your income. The second thing to be aware of, and we did mention this in our first presentation, but filing status is very important. It is important to determining whether you need to file a tax return, your standard deduction, and ultimately the amount of tax that you owe. Marriage tends to have an effect on your filing status, so that's why I mention it here. Okay, so the importance of withholding or estimated tax payments. So as I mentioned, the US tax system is a pay-as-you-go system, which means that you should be making tax payments throughout the tax year in order to avoid a large balance at the end of the year. One thing to note that although you should be making these tax payments throughout the year, the goal is that you're avoiding a large bill come tax season, but at the same time, you should have enough money throughout the year to cover your living expenses for yourself and for your household. So how do you make these payments? Really, there's two ways. The first is through withholding, and withholding applies to income from employment. So if you are employed by an employer, you should have a portion of your wages withheld and paid towards your taxes. The amount that is withheld depends on the information provided through a Form W-4. The Form W-4 captures the amount that you earn, your marital status, the number of dependents that you have, whether anybody else in the household works, and really the goal is to determine how much your tax liability would probably be at the end of the year, and from that information, how much should be withheld from your wages. The second way to make payments would be through estimated tax payments. And this method applies to income from self-employment, rental income, or dividends. And the amount that you have to pay would be through would depend on your expected adjusted gross income. So we did go over this in our first presentation, but the different filing statuses are single, married filing jointly, married filing separately, head of household, and qualifying widower. Today, we're going to focus primarily on married filing jointly and married filing separately. Usually, married filing jointly would be the preferred filing status, especially if one spouse is not unemployed and the other one is a wage earner or employed in any other capacity and is earning income. Married filing jointly is typically the better filing status. However, there are certain circumstances where it would be more appropriate to use married filing separately. So married filing jointly means really that both spouses who sign the tax return are jointly and severally liable for any tax liability that arises out of that tax return. So each taxpayer is responsible for the entire tax liability. And if there's an audit, both spouses are on the hook for any liability. So you may be wondering, is there any protection for a spouse who has no responsibility or knowledge of the tax liability? And yes, there is. So the Internal Revenue Code does make certain provisions for the mistakes or wrongful behavior of another. These provisions are known as innocent spouse claims. And again, so innocent spouse claims provide an avenue for relief from the joint and several liability imposed by filing as married filing jointly. And in order to claim innocent spouse relief, you have to file Form 8857. So there are 3 provisions in the code that allow for innocent spouse relief. The first is 6015B, 6015C, or 6015F, and there are slight differences between 3 of these provisions. So 6015B applies only to an understatement of tax. You must have filed a joint tax return that has an understatement of tax that is solely attributable to the spouse's erroneous item. And it would be unfair to hold you liable. So this would be seeking relief from the entire tax liability. Now, if you compare that to 6015C, which is seeking a separation of liability. So really what that means is, maybe you're responsible for a portion of the liability, but you weren't aware of another portion that your spouse was aware of and is responsible for. You could seek relief under 6015C under separation of liability if you meet the requirements. So in order to claim relief under 6015C, again, it only applies to an understatement of tax. You must have filed a joint return, and you must meet one of the following requirements at the time of requesting relief. So it's that you are divorced or legally separated from the spouse with whom you filed a joint return, you're widowed, or you have not been a member of the same household as the spouse with whom you filed a joint return with during the preceding 12 months of your request for relief. And it's important to note that through this avenue, there are no refund claims are available. So it would reduce your liability potentially, but you can't claim a refund. And then finally, equitable relief. So if relief isn't available under 6015B or C, but it would be inequitable to hold you liable for the tax bill, you can seek relief under 6015F. Okay, so injured spouse relief. They sound very similar, innocent spouse relief and injured spouse relief, but injured spouse relief is equally, if not more, important. As I mentioned, when you use married filing jointly, you are jointly and severally liable for the tax liability. On the other side of that, it also means that if you are issued a refund, that refund is going to be issued in both of your names. This can be problematic, specifically because if your spouse owes past due child support or past due federal tax debts or state tax debts, your refund and your portion of your refund can also be applied to those tax debts. So that is incredibly important to be aware of. So enter injured spouse relief. Injured spouse relief is a claim for the allocation of a joint refund. It's important to note that this is a claim for relief used by individuals whose joint return has been applied against the separate past due federal tax, state tax, child or spousal support owed by their spouse. The key word there is that it's available if your return has been applied to the separate past due federal, state, or child debts. And the reason that's important is so if you are responsible for the past due federal or state tax debts, then injured spouse is not going to afford you any relief. If you are the individual responsible for past due child support, injured spouse will not afford you relief. And in order to claim injured spouse, you have to file Form 8379. It's best to file this form when you file your tax returns. But again, and that's assuming that you're aware that your spouse has these past due debts. This, as we saw in 2020, this became very important when the stimulus checks were sent out based on your 2018 and 2019 tax return. And it took a while for the IRS to catch up with the injured spouse claims that were filed. But yeah, so it's best to always file that if you're aware, and if you know, so you should really, if you are aware of the past due debts, you should file Form 8379 with your tax return. I know I went a little bit fast, but does anybody have any questions? Okay. So once again, these are the various methods that you can contact our office. We are still operating remotely, so although our address is listed there, we are not open at this point in time, but please do not hesitate to reach out through phone or email. We do also have a new web submission form that is available on our website, ecbavlp.com. And if you just go under the LITC tab, you'll be able to submit a web submission form. So thank you for your time.